I'm Nick from NCG English, and today we're going to have a look at financial vocabulary. 45 key terms split over 4 videos, and today is part 2. So next up is number 11, drawings. Drawings refer to money taken from a business by its owner for personal use, such as household expenses, food and clothing. This is not considered an expense or overhead for the business and should not be confused as such. We can use the verb to draw money from a business. It means the same as to take. For example, my financial statements show a profit of £75,000 for the year as an electrician, with drawings of £35,000. This leaves me with a substantial amount of money. Number 12. Compensation or damages. Compensation refers to money given to a person who has experienced loss or injury, particularly in a legal court case. For example, the court granted the hotel food poisoning victims compensation of $100,000 each. Now, there is a slight difference between compensation and damages. Damages can be larger than compensation if a court decides to award more money to the account for additional factors such as mental distress or loss of reputation. Number 13, a dividend. A dividend is a payment made to a company's shareholders from its profits. Dividends are usually paid annually and approved by the company's directors. For example, during the company's annual general meeting, the directors approved a dividend of £34 per share to be paid on January the 31st. Some people confuse dividends with salaries. Both result in money leaving the company, but a dividend is a distribution of already made profits, while a salary is a business expense. Number 14. Reserves. In financial statements, reserves represent the profits a business has made in the past, but has not paid out. A company must maintain a sufficient amount of reserves to trade without cash flow problems. For example, the shareholders' equity in the financial statements totaled approximately £1.25 million, consisting of £0.25 million in share capital and £1 million in distributable reserves. The directors voted not to pay further dividends to ensure the reserves remained above £1 million. Most reserves are distributable, meaning a company can legally pay them out as dividends. However, sometimes a company may have a distributable reserve which cannot be paid out as a dividend. Number 15. To understate or to overstate. In financial statements, when a mistake is found with a number, accountants don't say this number is too low or too high. They say this number is understated or this number is overstated. If the number is too low, it is understated, and if it's too high, it is overstated. For example, we discovered an error with the bank balance. Our records show it's £105,000, but actually it's only £95,000. We've been overstating it for several months. What bad news. Number 16, net book value, NBV. The net book value refers to the value at which fixed assets such as vehicles or machinery are recorded in financial statements. The value of fixed assets decreases over time, a concept known as depreciation. The NBV changes in financial statements each year. NBV is sometimes referred to as the carrying value. For example, The company recently sold the managing director's Mercedes for £35,000. The NBV in the financial statements was £33,000, resulting in a small profit of £2,000. Number 17. Earnings per share, or EPS. Earnings per share is a calculation used by stock market analysts when comparing companies. The calculation is the profit the company divided by the number of shares in the company. EPS can help people determine which companies to invest in. For example, Zamora PLC has an EPS of £2.60, while Murray's PLC EPS is only £1.90, making Zamora a better investment option. Next up is a new topic of banking vocabulary. Number 18. Bonds. Bonds are loans made by investors to companies or governments. The bondholder, who is the investor, will receive a fixed rate of interest from the borrower. The rate of interest remains the same each year for the duration of the bond, which is typically for a set time frame such as 5 or 10 years. For example, the Kurdistan government is issuing 200 $1 million bonds to fund the construction of their new railway. The bonds have a term of 12 years and offer a fixed interest rate of 9% per annum. Applications are due within the next 60 days. Number 19. Mortgages. A mortgage is a loan used to purchase property or land. The loan is secured against the value of the property, and the bank may take possession of the property if the mortgage is not repaid. Mortgages are typically long-term loans with terms of 20 to 35 years. There are two types of mortgage: interest only and capital and interest. With an interest-only mortgage, the monthly payments only cover the interest, while the original amount borrowed, the capital, remains outstanding. With a capital and interest mortgage, the capital is repaid over the term of the loan, typically resulting in no outstanding amount at the end. For example, Hart Bank is offering a new mortgage with an interest rate of 2.75% per annum for loans over £100,000. Number 20. Security and collateral. Security and collateral refers to assets that a bank may take from the borrower if the loan is not repaid. These assets can then be sold by the bank to recover the outstanding amount on the loan. For example, my mortgage with Hart Bank is secured against my house, so if I fail to make the payments, the bank may repossess my house. Thank you very much for watching this video to the very end. If you're not yet subscribed to my channel and you're learning English, then you're missing out on a lot of free content. So hit the subscribe button and like this video if you enjoyed the content, and I look forward to seeing you in part 3.